Hey traders, Lance here. I want to go over my market survival guide and share with you 3 tips that I'm looking at right now when I'm trading the markets. So let's start with number 1. You have to trade like a hedge fund right now. Now what that means is the whole concept of a hedge fund is to have long exposure and to hedge with short exposure. So like most traders, I'm sure you're more long bias or you have more long positions in the market, but it's always smart to have some defense positions out there. They could be gold, silver, bonds, yen. More importantly, you should look at having shorts. Now, I'm not just saying you have to short stock, but you can look to have some put options, maybe on those big tech names like a Microsoft, Apple, Facebook, Netflix, or even the indexes like the IWM, QQQs, and the spiders out there, even the diamonds for the Dow out there. Always hedge part of your book. That way, if we gap lower in the markets, let's say there's new China news or trade fear and the S&P's gap down 2% overnight, you're going to make money on the shorts. And let's say we have good trade news. Well, those longs will make money. Sure, you'll lose money on your shorts, but your longs will hopefully make up for your losses in the shorts out there. Another thing, tip number 2, look at US-based domestic stocks. Look for names that have minimal or zero China exposure. That's what I'm talking about right now. The stocks like JD, Baba, Baidu, those names I completely removed from my watch list, from my radar, because I know they're going to be China trade sensitive out there. I want to look for names like especially Chipotle, McDonald's, Wendy's even, these defense names, a Walmart, a Target, a Costco, names that are US based that aren't going to have a bunch of exposure to China. And you can actually look at, if we do have negative China news or a new trade war, are people going to stop going to Costco? No, they're still going to go to these names. So these are the stocks I'm focusing on right now. And then number 3, look at isolated events. I'm talking about 24-hour trades where you can single out the trade to a specific stock. They're like earnings. Maybe it's a biotech and they have an FDA approval out there. But right now, I'm looking at earnings. You have bank earnings upcoming this week. You start having Netflix and big tech earnings rolling around this week. You have airliners reporting this week. You could put on trades literally in the afternoon. The names will report after hours or before the market opens the next day, and boom, you close out your trade in less than 24 hours. So you're not exposed to news with these names. You're literally holding these trades 24 hours when you're looking at earnings events, and that's what I absolutely love and what I'm doing right now. One more helpful tip, and I'll give you one of my secret free giveaways that I love looking at, and most traders don't talk about this. If you're scared of what the markets are going to do intraday, pull up the yen, the Japanese yen. You can even look at the FXY, it's the yen ETF. Pull it up on a 5-minute chart and see what the yen is doing. If the yen goes up, stocks are going to go lower. If the yen's going down, stocks are going to move up. Another thing, I'll give you everything free today. Look at the tick chart, the NYSE tick. It's $TYCK. Let me actually write that down here. TICK. That's the ticker symbol. Negative ticks, it means traders are selling, institutional selling. Positive ticks, traders are buying the market. You could get a good direction of the S&P and the overall market when looking at the tick and the Japanese yen. Again, FXY for the yen. You can actually look to at 6J for the yen futures, or you can look at the currency pairs if you're a Forex trader. Lance Ippolito with the Future of Wealth. That's my market survival guide. Let's make some money.